Good day, everyone. Welcome to the Curious Minds Corner. Today, we'll be discussing the circular flow, which is a pretty interesting topic in economics. Since it's a pretty big topic, I'll break it up into parts. Since the first video, this will be part one. It shouldn't be that long, but it's very important. So yeah, let's get into the video. The things to look forward to in this video, or the things I will be covering, is to give you guys an introduction, just a few things that should be known to everyone. Then we'll go through definitions. By all means, these are not all the definitions that you will be needing or using in economics under the circular flow. It's just the definitions I find that you would need to have an understanding of as I speak in this video and discuss certain things. Then I'll show you the diagram to the open sector. Then we'll discuss the economic participants and their roles. And just to wrap everything up, we'll go through a checklist, which hopefully will be useful to everyone. To start us off is the open economy circular flow model. So now, just a keynote here, we're talking about the open economy. Just mind this. Very important. It's not just the economic circular flow, but it's an open, meaning that it will involve the foreign sector. So the circular flow model is a fundamental concept in economics that illustrates the flow of goods, services, and money in an economy. The circular flow helps you understand so many things that happen around us. We may know them, but giving you like some terminology and some fundamental concepts here and there is very important, which is what the circular flow aims to do. So the circular flow model often open economy shows the workings of an economy that is open to the foreign sector. So obviously we trade with all countries around us, and it is very important to understand the importance of that, or what exactly that entails, or how that affects us as an economy. So now it is very different to a closed economy, because a closed economy does not involve any other participants that are not within the country. Moving on to our definitions. These definitions are just a few that are used during my discussion. So hopefully you have a clear understanding of them. You don't need to memorize any of these definitions or have them by your head or crack the keywords, but just have an understanding of the concepts and understand what it means when the certain terms come up in your questions or when you're reading something. Ensure that like you understand what this term stands for. So basic components, these are the primary agents in the economy, which are the households and firms. Households represents individuals or groups of people who own factors of production, which are land, labor, capital, and entrepreneurship. I hope that you have a clear understanding of those. And then you have our firms. The firms represent the businesses that produce goods and services. Then we have our markets. Our markets I only have the two markets here, but there's also the financial markets. But the product markets is the market where goods and services are bought and sold, whereas the factor markets is the markets where factors of production are bought and sold. We have also different flows. Please, I think a lot of people get tripped up, or not even tripped up, but they don't know that they confuse the two between the income flow and the real flow. Now, income flow can also be known as the money flow, which is when households receive income in exchange for supplying the factors of production, or the businesses receiving the payments of the goods and services. So it's basically the money part. Furthermore, we will have our real flow. So the real flow is the flow between the goods and services that happen between the participants. And then the financial sector, those are the financial institutions that are not directly involved in the production of goods and services, i.e., those can be banks, insurance companies, pension funds, and the JSE. Since we're discussing the open markets, please just understand that is the trading between a country and every other country, so basically the foreign sector. This diagram, I'm pretty sure I'm gonna have it in every one of my videos because you need to be so familiar with this diagram, because the minute you understand every component of this diagram, you have the circular flow in your brain. You have it locked. So I'm not going to discuss everything in here, like the the labels here, like TGI. Those will be discussed later on in the videos that I make, but just to know, T is tax, I is investments, G is for government expenditure. Those are obviously linked to leakages and injections. So now we can start off by looking at our diagram. We're going to start with the private households. Those are also known as just households, or you can say consumers. But now we're going to start with I'm going to discuss the real flow and money flow. But basically the real flow is the outside part of the arrows. This is the real flow. So there's no money involved here. This is just the real flow. So we have our two markets, which is the factor markets and the goods markets. Then we have our three participants, which is the businesses, the states or firm. Then we have our households. And then then the last sector is the foreign sector. So to start us off here, we can start with the private households. Obviously, our households will produce or supply their factors of production on the factor markets. The factor markets is not like, it's not just a store or a building. Factor markets can be anywhere, online or via conversation. Wherever you sell your factors of production, whether it be your labor, your land, your capital, or entrepreneurial skills, that is you interacting with the factor markets. Now, within the factor markets, you meet with the business sector, which is the second part of um, the factor market. The first part is obviously the households supplying their things, which are factors of production. Then the second part is the businesses actually interacting as well. So when the businesses interact or firms interact, they in end take or use the factors of production, and then they use those factors of production to produce the goods and services. Now, when they're done producing those goods and services, whether they use your land, whether they use your labor or your entrepreneurial skills or your capital, they use those things together to produce goods and services. Now, those goods and services are then put on the goods markets. The goods markets is usually, we find them, it's just like stores, but it can again be online, anywhere, just where there's a transaction between two people agreeing on a certain amount and you giving something off, that is a goods market. So that's where the businesses produce their goods and services. Now the second part to the goods and services again is the households. Now the households here will buy the goods and services, and yeah, so the cycle will continue. This is the real flow. It will continue on and on and on. Now if we also take in the states, now the states is just there, but it's very important. So it interacts with the factor markets by buying from the factors of production, like from the factor markets. The government itself can also use the factors of production. You've heard of people that say, I work for the states, or whatever the states, I'm under the states. Those are people that are used by the states. So the government does interact with the factor markets, and it also interacts with the goods markets. So obviously whatever they're using in their projects, they use things that are produced within the goods markets. So that's how they interact with them. And then they receive the factors of production, and then they spend on it. So the factor markets will receive the money or whatever that is used, whilst giving off whatever they supplying. Same goes with the goods markets. People will sell to the government and receive money. So here also we have the financial markets. I'm not going to talk too much about the financial markets today because it's not my point of focus here. But then now when discussing the money flow, which is the inside part here. So the money flow is, we can start again with the private households. Now when private households give off their production, what's this? Their production thingies, their land, their labor, their capital, their entrepreneurship, they will receive wages in return, or interest, or rent, or profit. In a sense, they just receive income. They get paid for the things that they give. So when you apply for a job, that's you being a household giving off your employment or your labor, and you receive a wage or a salary. That is your income. So what you do with that income, obviously the businesses are buying, so it's expenditure on the factors of production. Then it goes to the private households. The households then again use that money to either buy goods and services or save. But usually let's focus on them consuming. So the amount of money that they use to buy things, they buy their things from the goods markets. Now, when people buy from the goods market, the people who receive money are the people who produce the goods that are being sold. So those are businesses. Clean, that's simple. Again, with the money market here, the states rule the T here is for tax. So now the businesses, as a business, you function as a participant of the economy. You pay taxes and then you receive public services. Same goes with the private households. They pay taxes and they receive public households. But please don't think public services are free, like the roads that people drive on, or the lights, the street lights that you are surrounded by, or the public hospitals or public schools. Those things are not for free. Taxpayers are paying on behalf of everyone else. So yes, taxes are very important and a very useful part in our economy that the state uses again to buy other things, or to go to the factor markets and buy labor. They use their taxes and stuff. Then now, because we're discussing the open sector, we're going to also talk about the foreign sector. Now, the foreign sector, um, there's an X and M here. The X is for exports and M is for imports. The exports, these are the things that we sell to other countries and receive an income. So now the outgoing area obviously means that we selling our goods, whatever it may be, whether it's our natural resources or our labor or entrepreneurial skills, whatever, we're giving them off to the foreign sector, and then we receive payments for the things that we give, which is payments for exports. That is an injection. I hope this is not a new term to you, but basically an inflow to the money, to the economy. That's money coming into the economy. Then we have imports. Imports are things that we receive from other countries. We buy those things, we don't get them for free, so we have to pay for those imports. So now any one of these participants can um, play with the foreign sector. So obviously businesses are importing and exporting every single day. So even households ourselves, we buy things everywhere online and we import things, and sometimes some people sell things to other countries or whatever the case may be. But let's basically give a little bit, actually not a little, a lot, on the circular flow. So if you know how to explain the circular flow model from just looking at it without having to look at the notes, and you just understand exactly what the flows are and what the errors mean, you are good to go. Even when you're answering your questions, it will be easier because now you understand exactly what this means, and not just statements that you're writing in a test, but you understand exactly what that statement entails, who does it involve, and how does it affect the economy. Furthermore, now we're looking at the circular flow participants and their roles. Now, this is basically what I've been discussing in the previous slide, but now putting it into words. You can obviously pause, write down the notes, read them on your own, right? Like compare them with the notes that you have, and just check if this gives you a better understanding, or just a few points that should be general to you right now. So like households, which are the major consumers of economic goods and services, for they use their money to buy from firms. So now households are our primary economic participants because they are the owners of the factors of production. So now if we don't have households, the circular flow does not exist, because without them, there's no need for a flow. Then we have our households sell obviously the factors of production in the factor markets, which is already covered in the previous video. You can look further at all the other points that are under here, but it's basically everything I've been saying. But please do not hesitate to pause and ensure that you have a clear understanding of each role that is under the business or households or any participants on the circular flow. More again on the other two participants, which are the foreign parts and then the public slash states or firms. Now, with the public, I didn't speak too much on it because they didn't usually ask you a lot of question on it. But just understand that the public sector refers to the local, regional, and national governments. So it's not just the president. We're not just talking about the presidents. It's talking about every person that is under um, the states. So the state provides the households and businesses with public goods and services. The state receives taxes from households. So something as income tax or VAT that goes to the government, and the government uses those income to produce goods and services. Um, you can read all of that for yourself. If you feel there are some things that are not clear to you, just pause the video and you read it on your own. To wrap everything off, we will look at our checklist. Now, this checklist is just to help you to ensure that everything that I've said in this video actually got in your brain cells. And also test yourself. If it comes in a question where it says, briefly describe the concepts related to the circular flow, or draw and interpret the open four-sector circular flow diagram, or discuss the four participants and the interrelationship between them. Ensure that at this point in time, after watching the whole video, you should like know how to answer these questions, and if not exactly how to do everything, but have an idea of how to attack these questions. And if you still feel like you're not 100% sure on any of them, re-watch the video, pause on the sections that you feel as though you need a little bit of explanation, then just sit with yourself, sit with your notes and compare. And trust me, you will be fine. This checklist is just to ensure that this video did actually help you. And we have come to the end of this video. I just want to say thank you so much for watching. If you have any questions related to this video or related to any other economics topic, please write them down below. I will be so happy. I'll be so happy to answer them. If you feel as though you have any personal questions about anything related to school, please email me on Curious Minds Corner. And don't forget to subscribe or share with someone else. Share with your classmates, and hopefully they will also find it useful. If you have any videos that you'd love to see, or any content that you feel you would need a further explanation on, please write them down also on the comment section and I will do them for you. So thank you so much guys for watching. Hope you do have a lovely day further. Bye bye.